Hello and welcome back. This video I'm taking a look at a fatal mistake called chasing the trade, and unfortunately this is a common one. And chasing the trade is simply paying far too much for an asset, a currency, whatever, after it's rallied. And there's always what they call dumb money coming into the market at that point. Now in this example I'm going to pick on Bitcoin, but the reality is you see this in several other markets. The recent mania has certainly caused a lot of attention in Bitcoin. And when I pull up the monthly chart, if I were to tell you that this were an asset, a stock, for example, and you saw this, you would say there's no way this can go on. But now that the mania has kind of swept the mainstream, people don't believe that it can't continue going up infinitely. And with stories of Bitcoin, becoming $1 million a coin and that we have gained 1,000 plus this year, you would think that would scare people, but it doesn't. It actually has money jumping into the marketplace. And I'm not saying we can't go higher from here. Obviously we can. I don't know when this ends, but what I do know is this is unsustainable. There have been recent manias over the last couple of decades, and it really surprises me how quickly people are to forget about the previous one. So, for example, it wasn't that long ago, models and rap stars refused to be paid anything, any of their contracts other than euros. And that was almost at the exact height. That would have been about 1.57, 1.60. And right now, the euro, after a significant rally, is about 1.17. So that tells you how much of a loss they took by, chasing that trade essentially. And of course, there were Forex traders out there that were going long at that point as well. Another one was when we got gold ATMs announced that they were going to start putting gold distributing ATMs. And that was pretty much towards the top of the gold market as well. We've crashed in both of those markets since then. Now, neither one of them went to zero, and neither one of them, I think, will go to zero. But having said that, certainly the bashing that you would have taken from jumping that mania is horrific. Now, when I look at this chart, and I realize that this chart could look a lot different by the time that you do, but just this one exchange, and that's another thing too, various exchanges have various prices, but we've gone from 1,000 to 17,000 in 1 year. So that's a $16,000 gain. Simply put, a 50% retracement would have the market somewhere around $9,000. So the question is, do you have the wherewithal to buy somewhere around 16,000 and let it drop to 9,000, taking that pain along the way with you, and especially if you're leveraged? Most people don't. These markets always pull back. There is no exception. This one won't be any different. And the hardest part is simply waiting for price to come back to a reasonable level. And this isn't to say that, 50% will hold. It may not. It might be more like the 61.8% Fibonacci retracement level. That's going to be a little closer to 7,000. That's another couple $1,000s per coin. If you have 10, then, that's $20,000 difference. So keep in mind, chasing the trade is an excellent way to hurt yourself. You could buy up here and somewhere around here get freaked out, jump out of the trade, take a 5,000 a coin loss, only to see it turn around and go in your direction. So by being patient and waiting for value is how you take advantage of parabolic moves. Trying to jump in at the top, that's an excellent way to really damage your account.